Hang tight. We are rating street alerts. I hope that everybody has a wonderful, beautiful, spicy market week. Please listen to what I said. Be safe. Have your stop set. Be wholesome. Give our love. Send him spicy emojis. I love you guys. Thank you for joining me. Good night. Thank you.
Yo, what's up, guys? Let me make sure I don't have the camera on, guys, because it's... Oh, wait. I'm getting a delay. Give me a second. Got a mad delay on this thing. Okay. Give me a second, guys. I like just literally fired up the stream right now, and I haven't streamed in a while, like probably over a week. So usually you'd think I'd be like on my game and stuff, but I'm tired, man. So give me a second. Let me just make sure I can't even see the chat right now. So like, spare if you're talking to me and whatnot, just give me a second. I can't see it. There you are. All right. So yeah, let me just load up this chat real quick. And like I said, this is going to be a very quick little stream just to kind of go over what I'm looking at. I'm at the end of my scan, so just give me a second. Let me see here. All right, there's my chat. If I can't see the chat, I can't answer any of your questions, and I can't interact. So let me pop out the chat, put that over here, put this over there, and panic. All right, so there we are. And move this. Got to rearrange all these windows. All right, so I think I'm there I am. And apologies for not having the camera on, guys. I actually just got a new camera, but I haven't set it up exactly. I got a new lens, new camera, all that stuff, so it's just still kind of chilling in the box, but that should be up tomorrow. So until then, it's no camera. And all right, so is everything good? Can you guys hear me all right? Let me turn this off. All right, you guys can hear me. Okay, cool. All right, so yeah, again, guys, apologies. No camera right now. This is just going through what I'm looking at and my positions. All right, so let's kick it off. I'm still in the V's. I don't have that much more to go through. I don't go through the whole list also, guys. I don't go through like every single stock. Basically, I'm just looking at like the stocks with the highest market caps, and a lot of big name things like that. But even then, there's a lot of stocks that I don't even know what the heck they do. It's not like they're all like Starbucks names or Walmart's or Krispy Kreme or anything like that. So the stock I'm looking at right now is VRTX. Damn it, it's late, guys. I'm tired. I'm not gonna lie. I'm tired, but I started off kind of late, so give us the runners. Well, you can see right here what I'm in, guys. Affirm, Best Buy, short Best Buy, FMC I'm long, I think that's like my only long position. Yeah. Goldman Sachs short, Halliburton short, JPM short, Marriott short, Schlumberger short, Target, Walmart. I am all short. Pretty much. This is the only long. That's it. So, and all of this was this week. All of these stocks was basically me just kind of, being active, and I'm still holding it. It's not like I'm going to get out of these. I mean, unless they start creeping up on me, of course, I'm looking at these. It's not like I'm, just going to stick with them and hold them. So I got my stops. Definitely got stops. Yeah, I got a lot, Sparrow. You know what? It's weird not having the camera. It really is. Like, Sparrow, when you get your camera, you're gonna know what I'm talking about, because like I'm usually looking at the camera and I can see myself and everything, and I feel like I'm flying a plane without being able to look out on the windows. I'm just looking at the gauges. It's kind of weird, but anyways, yeah, like you know what I was gonna say, Sparrow, is like when I was streaming, because I haven't been streaming for like a week, and it feels like it's been a long time. I say when I was streaming like it was years ago, right? But when I was like, when I started streaming, there was something that I did that I never did before, and it cost me money. And that's why I had to stop streaming, because I realized that I was trading differently, a lot differently than I normally trade. And one of those, the biggest thing is that when I trade, I only spend about an hour to 2 hours a day in front of the computer, even looking at stocks. And usually it's in the morning, I'll kind of see the opening, and a little bit in the afternoon, and then the closing last 30 minutes. So I usually try to catch it. It's actually maybe about an hour. That's it that I'm trading. The first 30 minutes and the last 30 minutes for sure. But I also like to look around lunchtime to see what's moving, because in lunchtime you can kind of get a good indication on where the day is going to go. So anyways, when I started streaming live, I was trading a lot more because I was in front of the computer. And this is one of the reasons why I actually left trading with the bank, because when I was trading with the bank, I had to sit in front of the computer all damn day, just like sitting there watching the clock and I was making trades, and I realized that if I was just to trade in the morning and, like literally in the first 30 minutes, place my trades, and the last 30 minutes, I was a lot more profitable. And the whole day was just like me sitting around doing nothing. I could be out at the beach. I could be out, doing whatever I wanted to do. I didn't need to sit in front of the computer the whole time. So that's when I made the decision to leave, trading, because the bank wasn't willing to let me not come into the office. And I was kind of like tired of that whole corporate life also as well. That I never wanted that stuff. A lot of people like aspire to, like be like these big Wall Street guys and whatnot. I really didn't give a shit about any of that, guys. I mean, I really didn't. For me, I just wanted to make money. And it was like, oh, well, you can make a lot with the bank and whatnot. But, like, you can make a lot, also trade, maybe not as much trading on your own, but you could still make a lot of money. So it's like, I don't need to be greedy. If I can like be trading, and traveling and, just doing whatever I want and not being stuck in front of the computer, not having to put on the whole, suit and tie and, wake up, go through traffic, because Miami traffic is horrible. So in the morning it's like traffic, and then everybody cramming into the elevator, all of that stuff that I didn't want. It's like it was just better to say, yeah, I'll take a little bit of a pay cut and do my own thing and have quality of life and be able to, go to Hawaii and just chill and trade and do that and not have to be stuck in the office. So that's why I decided, what, I got to get out of here, because this isn't really how I want to plan my life. And I'm kind of going on a tangent, guys, because I'm tired. I don't even know how I got on this subject. I'm looking at a firm and talking about all this stuff. But anyways, look, I started making a lot of mistakes when I was being in front of the computer and I was trading. I was holding on to stuff and not holding on long enough for them to finish through. And a good example of that is this stock right here, Datadog. Now Datadog, really, I should have been in this thing. I missed like 20% on this because I didn't hold it long enough. And this stock here, I'm just looking at the chart. I still should have been in this stock, and I should have been in. Let me see here, on June 2nd. That's when I should have started building a position here, right around this time here. And so all of this should have been me in the stock, building a position, getting out, you know, not just like buying and holding, but, you know, buying and selling all the way up. And so I missed, like, look at that. You guys can see on the screen, 92%. I missed a lot of this run here because I was in front of the computer instead of just placing a trade and trading the first 30 minutes and last 30 minutes. So that's like 90%. And that was kind of a real big wake up call. Like, you know, I knew streaming would affect my trading a little bit, but like 90%, you know, that can't be. So, you know, I had to really kind of like take a step back and see, okay, you know, how am I going to stream and, you know, also do this. Plus, again, I was also taking time from like my daughter because, you know, we homeschool her. So, anyways, all right, Sparrow. Yeah, well, good seeing you. Thank you so much for doing your stream tonight. It was good seeing you and hanging out with you. And hopefully we'll catch up soon. So, and again, I'm tired. So I'm like, I'm not really, usually I'm a lot more amped. But what I wanted to do, guys, is start up the stream just to show you what I'm in. For those of you guys, you know, in the room who are just curious. And, you know, let you guys know why. I mean, look, I'm heavily short on pretty much everything. And, you know, I was doing my scan today. Most of the stuff out there is also, I think most of my trades that I'm looking at this week, most of them are all shorts. Most of them are all shorts. So, yep. Now, if you have any questions or any, you know, of on any of these positions or whatever, guys, let me know. I'm just gonna finish up my scan though, and then call it a night because, like I said, I'm tired. But I did want to just come online and share with you guys what I'm doing. So let me see. Did you guys ask any questions in the room? I didn't want to ignore anybody. No, it looks like everybody's kind of chill. Yeah, so Lugdor, I pretty much scanned the whole S&P 500. I scanned the whole S&P. I scanned the whole Dow 30. I scan a little bit of the Russells, but it's you know, I could scan the whole. I could scan like 1,000 stocks in about an hour or so. So it's really not like, you know, like it's, you know, it's just quick. When I scan, I'll show you guys here so you can see. This is my watch list. So these stocks I'm always trading. These 40 stocks here. Apple, AMD, Boeing, Best Buy. These like I'm always trading these year round. UPS, I got this one I'm waiting for short. Look at that massive selling on the 30th, straight through the 50. So the fact that this one's getting dumped big time with this kind of selling, this is telling me a lot of institutions are starting to liquidate their position on this. They may be moving into FedEx. FedEx is looking a little bit better than UPS. So you may be seeing some kind of a shift, a rotation. There's a lot of money right now that's basically leaving and fleeing to a lot of large cap positions like Amazon, Apple. Apple's another one where a lot of scared money is fleeing to these stocks. These are like the only ones that are pretty much holding up. If I go through the list, you can see Apple, AMD, but look at Boeing under the 50, Best Buy under the 50, Caterpillar under the 50, Comcast under the 50, CVX holding, Disney under the 50, EXC, this one's kind of holding. Ford is surprisingly holding. Facebook under the 50, GE under the 50, GM kind of holding. Goldman Sachs under the 50, HD holding. IBM under. So you see a lot of stocks are under the 50-day moving average. So a lot of money managers are basically moving their money from these positions, and they're going to seek shelter in like your Apples. And Amazon's also breaking the 50, which is crazy. Because if Amazon goes, you're going to see a lot of stuff go. What do you do when you scan? So what I usually do is exactly what I did just there. Basically just kind of go through just like this. I don't need to really stare at the stock for a long time. I could tell within 30 seconds whether I want to buy it, whether it's a good buy, if it's breaking. Really what I'm looking at is the price action. I mean, I could take off all these moving averages and just trade with this. If I go through here, I don't know if you guys can see that. This is another way that I scan. Like really, this is all the information I need. The MACD and the chart. That's it. Just a chart in the movie and the 50-day moving average. Just like that, I can go through. And this is pretty much how I do scans. Start off with going through utilities and just kind of see how the utility sector is doing. Just like that, you can see what's breaking down. And same thing. Just like this. Like, so I don't need to spend, I don't really spend a lot of time. I just kind of look at, what's the trend doing, which ones are breaking through. So is it 50-year filter? So you'll exclusively trade long above? No, not necessarily. But for those of you who don't know, the 50-day moving average is pretty much like probably one of the most important moving averages that Wall Street looks at, especially a lot of big money managers, mutual fund mutual fund managers or hedge funds, pensions, anything like that. A lot of big money looks at the 50-day moving average. And it's a general rule. It's not like a written in stone rule, but anything trading above the 50, they will buy. And anything under the 50 is a strong sign of weakness. It's a sign that a lot of big money is no longer supporting the stock. Now, it's not 100%. I know some people say, there's a lot of things that trade under it, but for the most part, the 50-day moving average is probably, like I say, that's one of the most important moving averages that you could look at, that Wall Street is looking at. Now, there's others. Of course, you can see here, I have my 200-day, I have my 100-day, and then, of course, the 50 and the 25. But the most important by far is the 50 for me. I would say the 200 is pretty important as well. So, so when I scan, what I do, Hook, is I basically just go through I go through the sectors. I go through the sectors, and I kind of just see, again, how the stock is doing. So what I'm going to do right now is I'm going to go ahead and finish up the scan so you guys could join along with me. And I'm going to just type them in here because I think that's usually the easiest way to do it. So let me see here. I was on VRTX. Okay, so this one could just, I mean, just again looking at it really quickly, volume, MACD moving, stochastic. So you could see right here something happened. Okay, it broke through the 50 on good volume. Money started flowing in, and that's the first sign. This is like the first sign. It doesn't mean that you should buy it right over, but it tells you that a lot of money is flowing into this stock. Okay, and it broke above and it held, so that's usually a good sign. So this right here is what I start looking at potentially long. And with VRTX, November 8th, right here was pretty much, yeah, this is when I would have started buying. So even though it dipped down, now that's okay. That's the other thing. This right here is the I have a proprietary chart that I use, and pretty much I can, you know, it pretty much it allows me to measure if money is moving into the stock or moving out of the stock. It's a proprietary algorithm. And I use this because this is how I'm, you know, I pretty much see what I'm going to get in, what I'm going to get out, what I should be going long or short. And again, November 8th, this day right here, this was the signal that I got, the alert that this stock is being accumulated. So right here, I would have started, possibly started looking at this stock to buy. And again, that's November 8th. And that's way back here. So I would not have bought the stock until there. Okay. Which this is actually the first. Okay, so this right here, this is big. So right there, that's my sign. This pretty much is when I'm gonna I'm going to start buying the stock. Let me just say that. Okay. So looking at this chart now, I could tell right away, this is a stock that I'm going to be buying. So, on this price here, I'm going to go ahead and put an order out, and I'll go and fine tune my orders later, but I like to just put quick orders. So VRTX is a buy at 202. All right. So this one goes into my buy list. All right, so just like that. So I'll buy this one. Okay, and most of these I'm putting like between a 5 to a 10% stop. And that's it. Okay, so just like that, VRTX, this one is one that I'm going to place a buy order and start building a long position in VRTX. I'm going to hedge it by doing some options. And that's that. Let me check the chat before I go to the next one. Make sure I'm not forgetting anybody's questions. So you're basically judging the price action around those levels. I'm trying to get you to summarize your strategy in one sentence. Yeah, I'm based. All right. Trade the trend. Sum it up just like that. Trade the trend. And you'll see what I'm doing as I go into this one right here, which is VTR. There's a trend, right? This one already ran, so I'm not going to get it. Let's go into the next one. I'm just going to go through my list, and hopefully that kind of gives you, I mean, that's the best way I can show. I think if I just show what I do, you know, you'll kind of understand. So Verizon, there's your trend. Okay, don't want to be buying this thing, not going to buy it. So next one, Waters Corporation. Trend already breaking. All right, it already had its run. I want to start shorting here. Okay, I want to start shorting right here. I'm not trying to catch this like right. I want to get it as it's breaking, and then basically be in the stock shorting the whole way down. You know, shorting, covering all the way down. So with Waters, I already missed this. Okay, it was way over here. That would have been actually, I'll give you an exact day. October 1st. Okay. Right here. this pretty much was when my algorithm basically gave me the alert that this stock is now selling off. So right here, I would have started looking at going short. May have shorted here, or may have shorted it somewhere right here, maybe right here. But Waters is pretty much short, and this one's done. This one already had its run, so I wouldn't even touch it. I would have started liquidating on the 29th. So let me see here, October 1st here, and I would have probably got stopped out or closed out before it ran against me. And on the 29th, been out of the stock. So yeah, this would have been a dud, but I would have got out. Again, trying to max 5-10%. That's it. Let's go to the next one. WBA. Nothing here. WDC. All right, so this one's starting to kind of level off. You see that? Breaking the 50. Big volume. Okay, that's all I need. Look at that. Look at that candle. Okay, this tells me that big money is buying it. See, I don't care the retailers do. I don't really care what retailers are doing. Like, so all of this like volume here, I don't really care about that. What I care about is this right here. Are banks buying this thing? You know, and I used to trade for a bank, so I know how they trade. So November 23rd. Okay. This right here is pretty much when I would have I got the alert to start buying this thing. And let me see here. Yeah, okay. So would have bought, would have got stopped out. All right, so this one is on this one I'm just waiting for it to make probably break through the 50 on the hourly. Okay, cuz right here I would have got out. Usually when I like a stock, I buy it off the daily, but I trade it off the hourly. So this one, I will put on my watch for a potential long, and I'll be looking at the hourly now. The minute it breaks above and holds on the, I'd probably say it around these levels here, 59.40. That's actually what I'm looking at. Okay, so it has to break above here. Let's just say $60. Breaks above 60 and holds it. If it can do that, I'll go long in this one. Until then, this one just stays on the watch. Go to the next one, WEC. And all right, let me check on the chat again. You just did well. Thanks, man. Next says, and you exit on the reversal. Yeah, I'll exit, or I'll usually I exit. I don't really reverse it. Sometimes I'll reverse a position, but that's rare. Usually what I do is I just get out of the position and go on to the next one. So with WEC, there's nothing really going on there. Wells Fargo. All right, so this is all right. So the banks, I've been heavily shorting the banks, and you can see in my positions that I'm short JP Morgan, Goldman Sachs, and Wells Fargo is another one. The banks are falling apart, guys. Okay, the banks, there's a lot of money that is fleeing. They're having a difficult time, and so you're seeing a lot of selling going on in the banks. Now, Wells Fargo is not ready to short just yet, but I could tell you I'll probably be shorting this one sometime this week. Okay, it's having, I mean, look, it broke under the 50 and it's having a real difficult time coming up. Okay, so if this can break the lows here, that's going to be a really good sign for me. And maybe if it breaks these lows, that's when I'll start going short. And again, just put like a 5-10% stop. Maybe not even that. Yeah, actually, that's probably fair. Yeah, probably about a 5% stop. So I'm going to wait for it to break these lows here, and then go back and look at it again. Make sure that there's some big volume, or that it's it's breaking in a nice way. You could usually tell. It's not like just I want to see like breaking and holding, not just like touching the price and that's it. So and not weak volume. I also want to look at that. So anyways, Wells Fargo is going to go into my potential short. So I'll be looking at this one closely this week. Let's see how it trades tomorrow. Whirlpool had a, let me see here. This is November 3rd. This is the buy. So no, November 3rd was, what's the price? 218.07. That's what it closed at. Now I'm trading a lot higher than that. So, well, about 2-3% above. That's the other thing, guys. Look, I don't want to come up here and sound like, you know, look, I know it all. I don't. I trade a certain way. It makes me money, and everybody has their own way. I trade what works. You know, like, I mean, that's why I love Sparrow's channel. Sparrow trades completely different stocks, but she trades well. She has her own method. So, you know, a lot of what I do, it's just my own method. I've been trading for like 15 years, 10 years professionally in the markets, and, you know, the last 5 years just doing my own thing, trading my own book, my own portfolio. So with Whirlpool, this stock, I like it, but the thing is that I want to start building positions, and this is just how I do it, but I want to start building my position on the entry. So if you're looking at like on the 3rd, this is when I want to get into the stock. Not, you know, not like 21, 30-day trading days later. I want to get into here, okay? Because timing is everything. Timing is everything in the market. So I'll look at this one, but really I don't want to buy it here. Even though it's like, well, look, it's only 2%. What's 2%? 2% is 2%. That's, you know, it's, you know, if you're trading, you know, good $50,000 on Whirlpool, 2% is a lot of money. So I don't, you know, any little bit of percentage that I can save, I want. So I don't want to pay more for a stock. I want to pay a certain amount, or I want to get it at a better price, but I don't want to pay more for it. That's why I don't chase. Like when they're already done this, that's it. Like if somebody's like, oh, Whirlpool's on the run. Okay, great. I missed it. Next stock. There's hundreds more. I don't need to buy here. I want to buy here. Again, you know, like right here. So, yeah, timing is everything. And, you have to know when you're going to get into the stock. So let me continue on, guys. WLTW. This stock is breaking. Got my signal, got my alert on, what is this? Willis Towers. Let me see here. Okay, Willis Towers. I got an alert on November 18th. Okay, November 18th. This was the short time. It closed at 228.44. Back in here, 229.32. Okay, great. So it failed. Tried to break above the 50, couldn't do it. So this one I will short. I'll put this one on my. All right, so this one's going to be a short for tomorrow. With oh yeah, this is like little risk. This is like maybe 2.5-3% risk, which isn't bad. So I'm going to place some orders on WTL to short this one tomorrow morning. Let's go to the next one. WM, Waste Management. This one's on a tear to the upside, so missed the train on that one. Missed the boat, whatever you want to call it. That one's already running. Let's go to the next one, WMB. All right, so this one looks good. This one's starting to break. You can see right here, okay? It topped out back in October, sold off, broke the 25, tried to kind of bounce off that 50, failed. Now it's pretty much in bad territory. This is oil and gas. So oil and gas is, there's oil and gas. Okay. This one's going to, continue to have problems because of everything that's going on, the demand in oil, all the geopolitical stuff that's going on, all the lockdowns in Europe means that people aren't going to be moving around as much, means that oil and gas is going to go on a decline as far as demand goes, and this is not going to help Williams. So all of that, looking at the chart to confirm this, tells me this is a good short. And just looking at it now, see, that's also why I wanted to do the stream. This way I can kind of go live and show you guys what I'm looking at now. So WMB is a go for a short. So this one is another, well, let me hold on. Let me see here. All right. So this one has to break and hold under $27. Okay. It has to hold under $27. Anything above, I will not trade it. Okay. This right here is pretty much key for me. If I can go to the hourly, you probably could see it a little bit better. Okay. You see that? This right here. Okay. So I want to see it break this support and not be able to get above it. I want the sellers to take this thing down so hard that it can't get back above $27. If it can break under, and the minute it breaks 27 and holds under 27, then I'm game. The minute it gets back above 27, I'll give it a little bit, but if it moves above 27.50, I'm out. So I'm only really going to be risking on this one like 2%. So this is looking like a good one. So I'm not going to jump tomorrow, but again, I am looking for it to break under here. Okay, I want it to break under these lows, let's call it 27, and hold under it. If the sellers can keep this thing at that price, yep, I'll join them. So this one will go on my watch as well. Copy this to my short watch, and let's go on to the next one. Walmart, you guys can see I'm already short Walmart. I missed this one though. I really did. I got in real late. I got in at 138.36. I should have got in kind of above right here, but you know, it's something, so I'll stick around with it. I don't own a yacht, not yet. Not yet, but you know, being in Miami, I yachts are a thing here, and it'd be nice. Anyways, check out this one, WRK, West Rock Company. Let's see what we got. All right, so this one pretty much already fell apart. Okay, so there's nothing here, nothing that I see. Doesn't even, you know, at this point it's like, all right, what's it going to do? If it's going to move up and it starts breaking through the 50 with good volume like this, which this is not, then maybe, you know, maybe, but there's nothing there, so whatever, move on. Next one is Woo, which is Western Union. This one looks lousy too, so nothing there. See, and that, guys, that's the other thing. That's how I read it. I wish I could say, well, I look at this and that, but I've been looking at charts for like, I mean, you know, years. Again, I've been trading like 15 years. So, you know, I'm pretty much like, I wouldn't say I'm an old man, but definitely seasoned. My mentors are the old men, and they're the ones who are killing it. They're the ones who do very well. They can look at a chart right away and tell what, you know, just by looking at the chart, what's going on. They don't even, you know, they don't even need to look at a lot of things. They just look at the price and they'll be able to tell. So that's how it is with me. Again, I'm not comparing myself. I'm not saying I'm on their level, but you know, you can tell just by the candlesticks and the price what's going on with the stock. So this one right here, you know, the time to get in on this one would have been September 22nd. Okay, that's, oh, and I'm still in the hourly, sorry. September 22nd right here. Okay, this is the time to start building a position, and as you can see, it just basically made stairways all the way up to the top. Okay, now these are small movements. A lot of people wouldn't play this because it's only 5%, but again, you're dealing with high liquidity. Okay, so if the banks are trading this thing, I mean, look, for me, the most important rule is I'm not trying to find these big movers. That's not my way. That's not my style of trading. The first rule that I have is I don't want to lose money. So the first rule is I need to preserve my capital. So obviously, if that's front and center, then what I want is I want the least amount of risk possible. Okay, which is why you'll see a lot of my stocks. I don't. When people ask about a stock that's under $5, I don't even look at it, because most stocks that trade under $5 go to zero. At some point in time, they go to zero. They're cheap for a reason. Okay, they're not trading $50 or $150. They're trading $5 or under because they're no-name companies that haven't proven themselves. They may have something, they may not. But if you take 500 companies that are under $5, maybe like 2 or 3% of them will eventually make it. But most of them are gonna fall off and go to zero. So the risk on anything under $5 is a lot higher than something at $50. So again, for me, I'm not looking under $5 because that's a different way of trading. Usually people looking at stocks under $5 is because what they're looking for is a huge reward. They're looking for a really big run. Okay. And again, I'm not knocking anybody. I'm just saying that the goal for somebody trading for a stock that's under $5, they're looking for a big explosive move, like 20-30% in one day. Okay, so for me, I'm not looking at that, because for me, the risk is too great. I'm looking at preserving my capital. So I'm looking at what's the least amount of risk possible. I'd rather take 3% in something that has very small risk than, risk 30%, or risk some, a lot more for 30%. So that's why I don't look at those stocks, because it's just the risk doesn't match up with what I'm looking for. I got to go with the least amount of risk possible. And again, I'm only looking to risk 5 to maybe 10% max on a position. I don't want to risk anything more than that, which is kind of crazy, because some of these people are putting trades. They're risking, like 50% for like 30%, maybe even more than that. So, anyways, I'm not here to knock anybody's style. That's people trade the way they trade, and hopefully they're making money. Sparrow's awesome. That's why I love her channel. She, I wouldn't even entertain a lot of those stocks if it wasn't for her channel and the way she kind of goes through her stock scanning and whatnot. So I have a lot of respect for her. I think she trades very well. But yeah, I don't do anything under 5 just because, again, the risk is just way too much for me. So that's that. Hopefully you guys don't leave now because you're like, oh, well, then that means none of my stocks are going to be reviewed. I'll look at your stocks and review them. But again, guys, the first rule for me is preservation of capital. Okay, that's the very first rule. I build everything off of that. So looking now at Wynn Resorts, this one got chopped. This one had a moment where it kind of got its head above water right here. It had a little moment and it failed pretty fantastically. So could have did something here but failed, and this is what happens. So this one would have been like, yeah, another maybe about a 10%, maybe 5 to 10% loss on this one. I don't know, but nothing more than that. So now I am in XEL, and I really only have like 12 more names, maybe 15 more names, guys. So if you guys are tired, I know you've been on Sparrow's channel for a while like me, I should blow through these really quickly. Let me make sure I'm not ignoring anybody. I'm headed down to Naples in January, looking for a good time. True. I've got a call from when it was under 5. Her scanning method and what looks good is a voodoo to me. Yeah. She has her own method. She, it makes sense why she's looking at her stocks a lot more thoroughly than me, because those stocks you really need to be paying close attention to, like the insiders buying it, because they're so thinly traded. So the big pro is that you can spot the whales. You can spot them in those insider buys. For me, I just have to see this. That's it. I just have to see a huge spike in volume to know that a lot of big money is flowing in. So that's pretty much it. I know it sounds overly simplified, but look, guys, if banks, mutual fund managers, if they're buying stuff, that's what they look like. It's very hard for them to hide their volume. If they're selling stuff, that's what it looks like. Okay, this is retailers, these small little blocks. This is big money. So for me, I like to see that big, these big spikes in volume, and then kind of base my trading off that. So looking at XEL. Let me see here. Right here, this is looking good. So this is the buy, but it hasn't been able to break above the high of this candle. So there's money that's starting to flow in, because you could see right here, first it was a big spike in volume. Could have been like a short squeeze, I don't know. But the second part of that was that it broke above the 50 and it held pretty well. You guys saw the market this week. It didn't look like this. So this has relative strength. Not only that, this is a utility sectors company. That means this is power. That means that you and I can't decide if we want to give money to this company or not, because if we're going to keep power in our house, we have to pay this company. Okay, you have to pay your utility company unless you don't want any power. But you can decide you're not going to shop at Walmart, or you can decide you're not going to buy that cup of coffee at Starbucks, but you can't decide if you're going to keep your power on. I mean, maybe some people do, but most of us keep the power on, especially if you live like in a cold place. So this right here, you have no choice but to give them your money. And the fact that it's held up like this is pretty good for me. So I'm going to be watching this one, putting this on my watch tomorrow. This week, this could be a possible trade. I want to see, I'll tell you the levels. I want to see it break above right here. Okay. You see pretty much a little bit of a topping off right here. So if it can work its way up through these and the buyers can get it above 65 or so, 60, let's just say 65.50. Oh, well, no. 65.80. Above 65.80 and hold it, then I will buy it. Okay. If it breaks, oh, this is going to be a small stop too. There's going to be like a 2% stop, maybe 3% stop. So I'm just going to wait until, again, it breaks above, let's just call it 65.60. Okay. So put this one on my watch. And so this week I'll be watching Excel. And again, if it can do that, I will go long in this one. Let's go on to the next one. XL. XL, I don't see anything here. This one's just falling apart. Xilinx. I don't see anything in Xilinx. It is starting to break, but this stock is really strong. A lot of money in this one. Until it breaks way down here, this stock is still a potential play. There's just so much money coming into. I'm not going to short this one. ExxonMobil making its way for a short. You can see it's already breaking down. Okay. I'm not going to short it just yet, but let's see it maybe fail this price or fail to get above the 50. And if it can do that, oh, and I was looking at the wrong time frame. At least on this window here. Yeah, so you see ExxonMobil. Okay, it just broke under the 50, having a hard time to get above. If it can continue to have a hard time breaking above that 50-day moving average and maybe take out some lows, this is going to be a good one for a short. So again, this one goes on the potential short watch. Okay, so this could be in play for this week. X-Ray. This one already had its crash. Okay, this one's trading. already 25% off the highs. So you know, this one's a missed run. Let's go into the next one. XRX, XRX, Xerox, same thing, nothing here. XYL, nothing here. Yum, nope. ZBH, already ran. Zion, breaking, needs to break some more. ZTS, same thing. This one is not breaking, this one is strong. MELI, this one already ran. Missed the short on this one. T-Mobile, already broke, already ran. Missed that one. Siri, moved, fake out, came back down. Nothing here. NCLH, breaking. This one's, yeah, nothing here. And last but not least is NTES, NetEase. This one is, yeah, this one I pretty, well, let me see here. October 19th, got a buy alert on this one. Okay, that's this price here. Pretty much trading at the exact same level. So, let me see here. All right, so this one is I need to change this. I just noticed I did something wrong. NetEase or whatever, I don't even know how they pronounce it. But anyways, this one's a pretty good risk to reward ratio. So this one I could buy it with about a 5% stop. And about a, you know, who knows how much upside, maybe 10%. So I'm gonna buy this one and just yeah, this is another one. So let me go ahead and put this one on my. All right, so the last one is a buy. Yep, that's it. All right, so I'll just let you guys know real quick what I'm looking at. Okay, the whole time that we were in Sparrow's channel, I was scanning. You know, well, I like to do my scans while I'm listening to Sparrow, and you know, and kind of, you know, look at the stocks that she's looking at. One that she brought up was Kohl's. And Kohl's is one that I like for the short. So here's the thing, guys. I have 19, well, let's just say 20 Winettis. So about 25 stocks that to me all look like good shorts. I'll run through them real quick tomorrow, see which ones I'm gonna kind of get into depending on how they open up, how they're trading in the morning, the first 30 minutes. And then again, I'll come back and visit around the last 30 minutes and see how they done. And then I'll decide at the end of the day whether or not they're going to be plays. But I got 25 stocks, more or less, that I'm looking at. Okay. These are them. No particular order. Ralph Lauren. Okay. Looking at this, like there's only one buy. That's the other thing, guys. All of everything that I saw, everything is coming up for shorts. So there's a lot of stuff breaking. There's a lot more short opportunities than there is long opportunities. Again, only one buy. Let's just get to that. Okay, this one right here. Gilead Sciences or whatever. This is the only long position that, the only stock that looks good for a long. That's it. So I'll just kind of run through real quick though, and then I got to dip out because I'm tired. But got Ralph Lauren. Okay, for a short, I'll be looking at this one for a short. This one's like pretty much almost there. Got RE for a short. Okay, this is another really good looking short. PVH, PRU, PCAR, Oxy, Oracle. Oracle's breaking down. This could be a really good short here. Oracle. Now this is tech, so I'm not 100% sure, but this is really, really ugly on Oracle. This is some strong, some strong indication that this thing is getting sold off. So Oracle is a potential. Morgan Stanley, MetLife, Mac, LNC, Eli Lilly, General Dynamics, and of course, Kohl's. All of these look pretty good. And now, so my method is this, guys. What I do is I go through the stocks. I do my scans. Once I come up with once I've identified the stocks that are looking like pretty good short opportunities, I create my list of long and shorts, and then I comb through that list. Okay, so the first is a general scan to come up with a list, and the second phase, which is going to be tomorrow morning, is going to be combing through my list of potential plays and deciding which ones are the best, the cream of the crop. Which ones are in this case, most of them are pretty much all shorts. And actually, TJX is not. This is a long. This one looks like a good long opportunity. Also, SJM. So sorry, guys. It wasn't just Guild, but it's also TJX and SJM. So these are the three stocks for potential longs. Only three. The rest of them. What is this? 1, 2, 3. 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. The rest of the 16 stocks, these are all shorts, potential shorts. So now that I've combed through now that I've scanned the market, and I made my list for potential shorts and potential buys, tomorrow what I'm going to do is go through the watch list that I created today. So my watch list for buys is only 3 stocks. So from there, I like to find the I don't know, usually the top 3 stocks that are looking for the best potential plays. So I mean, I only have 3 stocks on the buy list. So I could tell you right now which ones. Again, I'm risk adverse, so TJX, this is about a 4% risk. Smuckers is about a 4% risk, so they're pretty much neck and neck. And Guild is about a 2% risk. Thing is, Guild already had, so right off the bat, Guild seems to be the best one. There's the least amount of risk in Guild, so I like that. The only thing is, you see, it's already kind of had a. Well, let me see here. Oh, man, I lost my. So let me just let me see which one. All right, so we have Guild. We have, yeah, Guild looks good. Okay, we have SJM. This one looks good too. And TJX. TJX looks the worst out of them all. See that here? Okay. It had a huge pop. It came right back down. There's a lot of weakness here. Okay. It's a fake out. So TJX obviously is the weakest. Doesn't mean it can't go back up. That's the other thing. Okay. It just means that it's the weakest. But you also saw that with SJM though. So they look very, very similar. So then maybe it is Guild. Yeah, it is Guild. So Guild is the best one out of the three. Not only does it have the least amount of risk, again, like 2%. I'll look at my hourly so you guys can see. See that right here? Okay. It breaks it. This is, yeah, like 1.3%. So yeah, about 2%, you know, stop, whatever. So this has the least amount of risk. So, and this one didn't really move like the other ones did. So I would be just like that. That's how I place an order. I place an order for Guild tomorrow and go long, hedge it with an option, and next trade. So that's it for the. So tomorrow, that's what I'll do with Guild. So this is probably going to be more than likely. This will be on my books tomorrow. This would be a trade I take. Now my shorts, I do the exact same thing, but my shorts, obviously I have a lot more to look through, like a good 16 stocks to identify at least the top 3 that I want to trade and, you know, take a position in. Sometimes I'll take more, but for the most part, I try to pretty much keep it at maybe, I don't know, maybe three trades max a day. And they're not all going to hit, but lately they've all been hitting. There was a lot of activity last week. There's been a lot of movement in the market, and you know, just a lot of stuff that's starting to break, guys. There's so much stuff, it's crazy. I mean, there's so many opportunities for trading. Like I said, all of this wasn't here last week. All of these positions was this week. And again, I'm not getting rid of any of these, okay? Not anytime soon, unless they start moving against me, okay? If they move against me, I'll get out. But for the most part, you know, this was all last week. So, and this is busy. This is busy time. So there's a lot of, man, there's so much movement right now in the stocks. And I'm looking heavy short. But that's the thing about, you know, I know a lot of people don't short. I don't, when I say short, I have to explain that too, because like the stuff that Sparrow trades, I would never short that. I'd be out of my mind to do that because, again, the risk is just through the roof. But, you know, shorting like Best Buy, this is, you know, this is just like going long. You're just reversing the chart upside down. Best Buy is, you know, if this one runs against me, it's not going to like one day pop up like a good 16%, unless it's earnings. But I never trade during earnings. I get out of the position. So yeah, but if you know how to short, then when the market's starting to turn like this, there's just a lot of opportunity to make money. Okay, you're not really, it's not like everybody's programmed to buy. Everybody, you know, CNBC tells you to buy, the Reddit forums tell you to buy, Webull, everybody on Webull tells you to buy. Everybody is programmed to buy stocks, but we're never taught how to short stocks. And if you don't know how to short stocks, it's like, you know, you're just moving up, but the market doesn't just move up. The market moves down as well. So if you don't know how to short stocks, you're depriving yourself of making money on the downside. And the thing about shorting is I love to short more than I like to buy, because shorting, the stocks move faster to the downside. Okay, they take the stairs up, but when they come down, they take the elevator down. So you can make a lot more money when you're short because they just move so much faster coming down. But again, if you're just buying, you're missing out on all that opportunity. VRTX, yeah, I have that one on there for a long. That's on the list. I'm tired, man. I'm tired. So, Delana, good to see you. By the way, I haven't seen you in a minute. I haven't been trading. I haven't been trading. I haven't been doing live trading. I've been, pretty much seeing how I'm going to do everything because it was affecting my trades, actually being in front of the screen. Okay, there was a lot of stuff that I was missing out on. So this month I'm going to be taking a little bit of a hiatus, I guess you can say. I'm still trading, but I need to figure out when I'm going to be streaming, and I know for sure I'm going to be doing at least 2 streams a week, and probably I want to do a stream like this where I'm connecting and pretty much sharing with everybody what I'm looking at. That's the first thing that I want to do, is a stream like what I'm looking at for the week ahead, and then probably a stream like on Friday or Saturday, talking about how the market did the week and what we can look forward to. So maybe 2 streams a day, but I don't know if I'm going to be streaming like every day. That's something I need to think about. But again, it's good seeing you. So. You also said buying XEL, and yeah, so let's see here, XEL. Yeah, this is, again, like I said, I'm tired. I forgot to put this one on the I have it on the list, but I didn't mark it with my flagging point. So but this is on the list. Shout out to you as well. you're really paying attention, because I'm already kind of like been looking at charts the whole time. So do you use the futures to gauge? Yeah, I do hook. I absolutely do. But that's just a gauge. Okay, so the futures kind of tell me how, of course, the market's going to open. So yeah, I look at them and pretty much get ready. So a lot of times, if the market is already moving, again, I don't chase. Okay, so looking at, like, let's look at this one here. Okay, let's look at this one here, XEL. With XEL, this one I'm looking at for a buy. All right, so let me see again. This was a buy on the 26th. Well, let me see here. No, sorry. The 29th, this was a buy. Okay, the 29th. Right there. This was the buy, okay? But what did I say about this one? Needs to get above and hold around what? 65, 70. Okay, you remember what I said right here? 65.70 needs to hold. So I'm looking at XEL for buy for tomorrow. So if the futures are up, then I know that probably this one's gonna pop. So I want to make sure that I have orders on this one, but I don't chase. Okay, so I'm gonna put my order to get it around, again. Let me see here. Yeah, around 65.70. Let's just say right here though. 65.80. Okay. So what I'm going to do is I'm not going to buy it if the futures are up big, because I know that this stock is going to pop up. So instead, I'm going to watch it. I'm going to watch it for a few hours. I want to see it break above and hold. And I want to see it hold for, at least half a day. Okay. Because a lot of times if the futures are up, you'll see a big pop to the upside, and then it comes right back down, the next hour. So that's how I use the futures. Okay. So, but the other thing is, honestly, I don't really even need to pay attention to the futures. Okay. Because I have my prices on what I'm going to buy it at, and I'm not going to spend a dime more. Okay. So for this one, if it takes off and it's, it opens up at 66, I'm not going to buy it. I'm not going to buy it. Okay, even though it's above, I'm not going to buy it because I don't know if it's going to hold at 66. So that's how I use the futures, because I know what's going to happen. You know, the stock is probably going to open up really big, but I don't chase. So that's why I say the futures doesn't really affect my trading, because I know that I want to buy it here. So if it holds, then I'll buy it. I don't mind spending, you know, a good 1-2% more, but it has to hold. And it has to hold at least for, you know, half a day. Yes. Yes, that's right. 65.80, Delana. 65.80. This is where it has to hold. Okay. But again, if it does it in the morning, I'm not going to buy it. I'm going to give it half a day to stay above 65.80. If it can do that, then again, I'll go long. Okay, and my stop is going to be, I don't know, my stop's going to be probably about 2%. Again, looking at the candle, let's just call it right here. So let's say I get in at 66 and I put my stop right around here. That's like, yeah, between 2 and 3%. Okay. Now this is you know, I'll put my stop like around here, but that doesn't mean I'm going to wait till it gets hit. It just, you know, this is pretty much my breaking point. If it breaks under here, and again, it's holding, not just like, you know, not just moves and then I'm not going to get out. I should say this, okay? These stops, okay? I'm not going to place a stop right here. This is like a mental stop, all right? I'll place my stop probably, you know, like a good 5% just in case it really falls. But my thing is that if it breaks under 65 or so right here, okay? Again, if it holds up here, then I'm long. But if it starts moving its way back down and it moves under the 50-day moving average on my hourly, and it breaks back into these levels here of 65.70, then I'm gonna get out. Okay, and I'm gonna take, you know, that's like, again, that's about 2.5%. So I already know what I'm willing to risk on this stock. I pretty much know when I'm gonna get in, when I'm gonna get out. And forgive me if I sound a little bit clouded. Okay, again, it's it's late, so I am tired, but hopefully I'm explaining this to you guys how I trade. Okay, I don't chase. I set my prices. I know what I want to buy out, and that's what I want to buy the price at. That's what I want to buy my stocks at. Okay, so this one again, I want to. I'm willing to pay for it up here and spend a little bit more for it, but I have to see how it does for the first 4 hours of trading. Then I'll know, okay, I'm going to buy it. That's why I say the morning is important to see what's moving. The afternoon is great, because at the afternoon, that's when I may buy this around 12 o'clock. And if it's not doing much at the end of the day, if I see that it's up here, then I'll buy it the last 30 minutes. Then, that's when I'll take my trades. So those are the most important trading hours for me. So again, yeah, that's the play on XEL, guys. So I have 16, almost 20 stocks to look at for the short. So tomorrow I will do that. I wish I had the mental strength to do that right now, but I don't. I don't, guys. I'm a little tired. But it was cool chilling and hanging out. Look, I just want to say this again. Thoughts on GME going up? Let's see. Let me see here. GME. No, I wouldn't touch GME. I think this stock is it had a moment here where it could have ran. So I like GameStop back in Let me see. I'll tell you exactly when. Back on November 2nd. This is where I like it. Okay. I liked it here. So it obviously faked out. Now it's breaking under the 50. So this was a failed run. It could have taken off here. Could have taken off somewhere around here. I don't know, another 50% or so. That's what the highs was there. It didn't do that then. So and again, I know there's some real people who are attached to GameStop. So just because I don't like it, don't take it as a personal insult. I'm not talking to you. I'm just talking about the stock, what I think about it. You want to buy it, go ahead. I'm not telling you not to buy it. Just saying I wouldn't buy it. This right here is a failed breakout for me. Okay, tried to make a run and it didn't. And so, yeah, I wouldn't buy it. It might bounce, you know, who knows? But for me, I want to catch them when they're starting to make a run. See that spike of volume right here? This could have been a nice movement to the upside. And it did. I mean, I guess it did. It ran like 20%. Then it gave it all back and then some. So I think if anything, GameStop could start rolling over. Get back down here, so drop another 20%. But I don't know. But yeah, this one, no, I wouldn't touch it. You know, and that's just like that. You can, you know, I can tell whether I'm in the stock or out of it. So what's the support? $154.98. About right here. Pretty much where that tail is. 154.98. Yeah. So, yeah, I wouldn't trade GameStop. Like I said, guys, there's you know 1,000 different stocks, 500 different stocks. You have to look at it like this. I'm not trading really companies. I'm trading patterns. That's what I'm looking at. So I'm trying to find the best pattern. If you erase GameStop and you erase the price and you just look at the pattern, this is really what I'm trading. So I don't really care if it's GameStop or if it's Goldman Sachs. Okay, I'm just looking at these blocks. This is what I'm trading. So there's no attachment to the names. I shorted. I bought AMC last week and I got out of it. I was down like 5%, and people got really butthurt about it. I posted on Webull, you know, that I was getting out, and everybody caught feelings because they're attached to the name. They're not looking at this. They're not looking at these blocks. They're not looking at the prices. They're attached to the name. They have emotional. I don't care about the name. I don't care about the company. All I care about is which patterns is going to put the most amount of money in my pocket. So that's what I'm kind of aiming for. So I go just through the stocks, just like that. You know, which patterns look good, which ones suck, and regardless of the name. But I do try to stick with, again, companies that are, you know, at least the top 500 largest market cap companies. So I don't want to trade any stocks that, you know, are really no-name stocks that I don't know of. Because, again, the risk factor. My goal is always preservation of capital. Okay. Preservation of capital is number one, front and center. Delana, good seeing you. Yeah, I got to go to sleep too. You have 150 put credit spread. That's why. Yeah. Well, look, the thing is with GameStop. Yeah, I mean, if you're playing it with, I think it's gonna move for sure. But I just, you know, who knows? So for me, I would probably play like a straddle. If I really wanted to get into GameStop, I'd play a straddle. But I really wouldn't, because I don't like playing options on anything that I play options on what I'm trading. And I really don't play options much, but because of the market, I've been, you know, hedging my positions with some, with options. But straddles are pretty cool, you know. Starting to play a little bit more straddles, try to get both sides. So look, guys, I just want to I want to end the stream by giving you a little bit of a market outlook. All right. Look, kicking off December trading, the last 3 trading sessions from the 1st to the 3rd, okay, were pretty bad. Okay. This is the S&P, but if you look at the Nasdaq, this is pretty bad. Okay, so we're off to a pretty crappy December. All right. I think the worst trading session in the market in about 20 years for the Nasdaq for December. Okay, we're down 2.7%, and the S&P we're down like 0.6, and the Dow is actually up a little bit, but the Russell is down like 1.8%, and I have all these written down here. So, look. You know what, and one of the reasons why the Russell is down also too, remember there's 2,000 companies in the Russell, is they're a lot more, those companies are a lot more sensitive to rising rates. So if you watch my video on YouTube, if you haven't, follow me on YouTube, okay, and watch my video, because I spoke about how if you're trading in these markets, you need to watch the treasury yields. Okay, that's one of the reasons why the Russell is trading lower. It's more sensitive to the rising rates. And that's what's hurting tech. That's what's pushing the Nasdaq down. And again, if you were listening, I've been saying that when the rates go up, it has a negative impact on growth-oriented stocks. Okay, growth stocks, they like low yields, whereas value stocks, they tend to do well when you have high yield conditions. And that's what drove the market, you know, down last week. So, you know, but by the way, I don't believe that the market is down because the Omicron virus or anything that I don't believe in that. OK, I don't believe that that's the reason why the market's down. When the pandemic first hit, the stocks that benefited from the market, from the pandemic, was stocks like Netflix, Zoom, Peloton, you know, and yeah, you did see those stocks rally when the market tanked like 1,000 points after Thanksgiving. But then the next, you know, Monday, the next week, they came right back down, and they were sold off heavily. Okay, a lot of the stocks they were already down big already, anyways. You know, again, Zoom and whatnot. So if you didn't watch my last video, I pulled up some of these charts, and I showed you guys a lot of the stocks right now. That, you know, again, you can pull up chart after chart, and you can see these bubbles that have been popped in these stocks. You know, a lot of them are the stay-at-home stocks. So right now, the stay-at-home stocks are some of the biggest losers in the market right now. And we just started the month. Okay. So again, I don't believe that the market is dropping because of the you know, new variant that's out there. I don't buy it. Okay. You should see a positive reaction, and you didn't. So and again, here's a good one, DocuSign. Okay. If it's about the variant, DocuSign would not be down, you know, like, what is it, like 70, almost 40%. Okay. If this was about the variant, this would be up about 40%, or who knows how much. Okay. So I don't buy that. This was a pandemic stock. This was actually one of the darling favorites, DocuSign. Okay. And again, down like 42% in a single trading session. So if the market is reacting to the variant, why is the darling of of the pandemic crashing to this price? Okay. Look at Zoom. Okay. In my last video, I mentioned how, you know, we had 400 new lows in the market, and we had very few highs, and Zoom was one of them that was making lows. As a matter of fact, it's continuing to make lows. Okay. All last week, it was carving down new lows. And this on Friday, it was down 4%. Okay. It's down 183. This stock, look at what it was trading at, guys. It was trading at like in the 500s. It's down 67%. This is Zoom. This is not some like no-name little company nobody knows about. This is Zoom. Okay, this we know this stock. That's a big drop. Okay, this is a huge drop in 1 year, and it's not even done falling. Okay, it's not even done falling. This thing can go down another 50%. Robinhood. What's Robin Hood? I'm so tired, guys. I can't even think right now. Anyways, look, just watch the yields, guys. Check out my video if you haven't. I talk about all this stuff. Okay. December of 2018 was the worst month for stocks since I think the Great Depression. Okay. It holds a trophy for first place as far as being the worst months for the stock market, and in December. Okay. So if you're watching the markets, make a mental note right now that I'm telling you December 2018 was really bad month, and right now we just started and we're already holding the record for the worst month yet. And I mean, yeah, we just started the month, we can come back, but the thing is that December of 2018 was a key month for the market. Okay. And if you're even considering all of the stuff that's going on in the market, I say the chances are about 40% that we're going to have a pretty bad month. Okay. So make a mental note that I'm telling you today that we're on track for probably maybe taking out that record. We have all the ingredients for a perfect storm. The same thing that was going on in 2018 is going on right now, except it's even worse. The only difference is that the Fed is not really tightening. Okay, they're talking about tightening and raising the rates and all that, but in 2018 they were actually raising the rates. Okay, they were at like, I don't know, 2%, 2.5%, 2018. So if the Fed raises rates, then they're not going to be able, they're going to be forced because they don't want to do that. And if you see that happen, stocks like Zoom is going to go even lower. The whole market's going to go even lower. But can you imagine this stock is again already down like 60%? This is not done. This is not done. PayPal, I don't believe it. Okay. Again, this is not financial advice. I'm not telling you guys what to buy or sell or anything like that. I'm just telling you that all the Fed needs to do is raise rates and you're going to see it drop. You'll see the market drop even more. The only thing is that the only thing holding up the market is stocks like Apple, Microsoft, Netflix. Okay. These big company name stocks, these big tech stocks are the only things that's holding up the market. Everything else is starting to fall apart. And look at Netflix. This one looks like it's starting to fall apart too. I don't know if this is a short just yet, but if it takes out the 200-day moving average, yeah, this can get ugly. Okay, so these have yet to fall. Okay, you look at again PayPal. Okay, Apple, Zoom, they're still like right here. Okay, but if they do this, then PayPal is going to go down probably here. Okay, and not just PayPal, but like 2,000 other stocks that are in the Russell 2000. So yeah, there could be carnage. Okay, which is again why I say you shouldn't be scared if you know how to short. What that means is there's a lot of opportunity. That's why you can see right here, I am short, 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 short. I'm short on pretty much everything. The only thing I'm long is FMC. And if this one starts to break down, I'll get out of this one. Okay, but everything is looking like there's so many trading opportunities to the short side. It's not even funny. I'd probably say like 80-90% of the trading opportunities right now are, I mean, look, I just did my scan, guys. You guys see what I'm in. I'm all short. Nothing looks really good. Nvidia, yeah, Nvidia is one of the few stocks again holding up the market. This thing goes, they all go. I like Nvidia too. I think Nvidia is great. This is where the strength is. But again, if this thing goes, the market's done. AMD is another one. Same thing. Like you really only have a handful of companies that are holding up the market. Microsoft is another one. But you go through, a lot of things are just breaking. There's so much stuff that's breaking. It's just, again. See these, you could just see, okay, there's a few names that are leading. And based on market cap. This is utilities, okay? So just looking through the first stocks there, but let's look at consumer cyclical. Amazon having some difficulty. Tesla pulling back. Home Depot, this is flying. This is another really strong stock. Home Depot. Baba, look at that. Netflix breaking. Nike stalling. Okay, had a run. Pulling back. Hopefully it holds. Disney breaking. Comcast. McDonald's is a stock that I'm starting to look at for a short. Okay, this one's starting to kind of, it pulled back fiercely to the 50-day. If it breaks, this one could be a short. Lowe's strength. Starbucks breaking. I mean, you know, a lot of stuff having trouble here. You can just see there's so much stuff that's, financials are looking nasty. Oh, and I'm at the bottom. See that? Largest capitalized companies are all breaking under 50. Berkshire, JP Morgan, but I'm short JP Morgan. Visa, Bank of America, MasterCard, PayPal, Wells Fargo. Financials looking really, really, really ugly. All right, guys, I'm done. I'm going to turn into a zombie if I don't get to sleep. So I am pretty much done for the day. Look, guys, I appreciate you coming over to the room. Shout out to Sparrow again for sending you guys over. It's been a pleasure. I hope you know I hope I was able to kind of at least maybe, you know, help you guys a little bit with seeing what the market is doing. I know I trade a lot of stocks that probably a lot of you guys don't, especially if you're trading more of the stocks that are under $5. Again, I just don't do that. There's just too much risk for me. But if you guys are trading, or at least you want to see what's looking, you know, good in the market, hopefully I was able to share at least my perspective on what I got. And you guys can see right here, this is pretty much, you know, this is my book here. Okay, this is it. This is what I'm in. So tomorrow I will be adding to this, and I've been getting really heavy, guys. I'm really kind of loading up because everything looks, it just, you know, these are the ingredients for a market crash. Okay, these are the ingredients. You get 1,000-point drop after Thanksgiving. That's a key sign. You guys see Bitcoin over the weekend. Okay, dropped 30%. Okay, that's supposed to be where people are putting their money into. It's supposed to be better than this. Gold. Okay, but look what happened with gold. Okay, while Bitcoin was tanking, you see gold kind of moving steady. Now gold really doesn't move much. I mean, this you know, but still a lot of stability. This is one of the things that's moving in the market. So I'm going to start looking at and I'm looking at dust as a potential long. I'm waiting for it, but it's still not there yet. Okay, it's still not there yet. We'll see. But anyways, it was nice having you guys. Appreciate you spending, I don't know how long I've been, let me see here. About an hour. Wow. 15 minutes turned into like an hour and 30 minutes. So anyways, guys, thanks so much for hanging out with me. I will try to do a stream tomorrow. I'm not sure if I'm going to be streaming tomorrow, but I'll try to do something just to see what moved. Probably do a stream of the watch list that I made for this week's shorts and this week's long, the longs, and again only 3 potential buys and a lot more sells. So I'll try to do a quick video on that and update you guys, and maybe do that tomorrow. What do you have? PLTR? PLTR. Yeah, man, I see this one going down. Okay, this one's already tanking. I wouldn't buy it. You know, this just, again, the trend is already moving. You're trying to catch a moving train on this one. So if you're in this one short, you're doing pretty good. It's the right side. But I would have been looking to short it, you know, here. Okay, this is where I would have liked to start getting in short. But yeah, I don't know. Not one that I don't see a good entry or exit on this one. Just if you're short, you're doing good. If this thing is moving south, so if you're short on, you're already doing good. If you're long in this one, yeah, be careful, because it's, you know, basically you're riding this thing on the way down. Oh, people, yeah, man, that's awful. People losing their retirements. I know. A lot of them are losing too because they don't know how to look at this. They don't know how to read charts. No one's ever taught them how to do that. That's why I started my channel, to help people to learn how to read these charts. Because a lot of people, even though they're trading, you know, like a lot of these highly speculative stocks, a lot of people still have stuff in their 401ks. You know, they do. And if you don't know how to read these charts, you can get caught and ride these things all the way down. And you don't want to do that through a market crash. Because like I say, when the markets crash, they move quick and they move big. And so even if you don't trade it, just being out of the way will save you, because you can buy back at a lower price, you know, once the dust settles. You know, once it finally collapses and it finds its lows, you can pick up stuff on sale. But if you ride it all the way down, it's a shame. So that's why I started the channel. And I'll be trying to make more videos, but again, this month I'm I'm on hiatus, okay? Because I just got to figure out how I'm gonna do the schedule on the channel and all of that stuff. I really gotta kind of go through all this stuff. So until then, no, have no idea. Palantir, I mean, tech company. Like I said, I don't really. The most important thing are these blocks here. That's it. I'm trading blocks, guys. I'm trading prices. I'm trading based off the activities of buyers and sellers. I don't really care what the company does, whether it's Target, whether it's Palantir, as long as there's heavy market capitalization. So I know that the company is not going to go to zero. You know, a lot of money has to be behind the company. That's enough for me. So the market cap has to be high, and I have to have liquidity. Okay, this Target trades 3.2 million shares. I have to have at least 1 million, you know, at least 500,000 shares traded on average. That's what I like to do. So it's not like I'm going to trade pennies. Yeah, pennies do, you know, they are also chart like this, but I don't trade those because, again, most companies trading under $5, 80-90% of those companies in 5 years will be at zero. They go bust. So only a handful make it. But, you know, you have your chances, you know, you're trading like the top 100 companies in the world, probably not going to go bust. They'll probably be around for a while. You know, Amazon, Netflix, again, all of these stocks here. That's why I have no problem shorting like Affirm and all the rest of them. Halliburton. Oh, yeah, in AMC I was long this, but I got out like right here, down like 5%. So AMC was again, this one could have made a run, but it failed. So that's it, you know. Maybe it comes back, but again, there's really you know, it had some nice support here. The fact that it broke it last week, that shows that the sellers are heavy. Sellers are strong. There's a lot of strength in the sellers. So until then, I step out of the way and let them do their thing to the stock, and then I'll come back, you know, after they do some damage, then I'll come back and I'll look at the stock and see, you know, if I want to buy it or whatnot. But right now they're pretty much sending this thing lower. Yeah, if I was an AMC, I don't know, I would be doing a straddle. Because you that's the thing, you don't know with these stocks, it could explode to the upside, and you can get caught. So I wouldn't short AMC. This also has a lot of, yeah, shorting AMC is dangerous, okay, because you could have that kind of movement, okay. You're not going to see this kind of movement go on again. I mean, it's, you know, it's very unlikely that you're going to see something like this go on with Best Buy. So Best Buy is, you know, when I'm short, I love to short, but I only short, you know, big, large companies that are not just going to pop to the upside. So I don't want any low floats, anything with a, you know, that I can get caught in the short. But I like the AMC because of that pop. I was waiting for a pop. I was waiting for something like this to go on right here, but it didn't. It failed, unfortunately. So, all right, guys, I am out, and nice seeing all of you. Thank you for coming in the room again. Shout out to Sparrow for just being a really dope friend, and rating my 5-minute 10-minute stream that turned out to be almost 2 hours long. So look, guys, if you're not following me, definitely do a follow. And if you like, you know, if you like what you see, these companies here, you want to know how I'm playing them, I'm going to be trying to do more videos where beginning of the week, I kind of do something like Sparrow, where I kind of go through the market and then I look at what I'm looking to trade for the week, and then maybe a video after the week to see how everything did. So this is what I'm in. Everything looks pretty good. I think the only thing that's down is this call in Goldman Sachs, but this could change. Like this right here, this is just because of, you know, some crazy time. Tomorrow will probably go back to like 5 or 6 or something like that. Who knows? But, you know, this 50% is not like, you know, it went from like 10% to 50% once the market closed. So it's just kind of a crazy tick. But anyways, my main positions, I think, let me see here. Okay, Halliburton is the only one that's down a little bit. JP Morgan's up. Marriott is up. Oh, Schlumberger. Okay, so Schlumberger is another one that's down a little bit. Target is down a little bit. So these are the only ones that are kind of, you know, not doing their thing. So we'll see how they do tomorrow. Take care, guys. You all have a good night. Sweet dreams.